Okay, so I guess we are live. So first, hello and welcome to Sunday's live stream. My name is Ivo, and first I will do a quick overview of some of the key markets like stocks, crypto, commodities, and then we will do a Q&A where I will try to answer some of your questions. Please put your questions in the chat or on our Facebook page. So before we begin, I just want to do a quick audio test. Please let me know if the audio is okay in the YouTube chat. And we will wait for maybe a minute or so just to have more people join in case someone is late. So please be patient. Okay, so the sound is okay. So let's begin with our overview. But first, a bit about myself. I have been involved in the financial markets for more than 10 years, and I have been providing analysis for both retail and institutional investors. So without further ado, let's begin with the overview. First, I want to take a look at the US tenure yield, and I will explain why. In a nutshell, declining yields and especially negative yields mean that financial conditions are tight, which tends to put downward pressure on stocks. The 2020 March sell-off in stock in stocks was preceded by a sharp drop in yields. The Fed then had to come and provide liquidity, and since then we have been in an upward trend. Lower yields also tend to favor a stronger dollar. On the other hand, rising yields tend to be stock bullish, especially certain sectors. So basically having a good grasp on yields is essential when forecasting market trends. Okay, so now let's focus on the wave structure. Since the start of the year, the US 10-year traced out 5 waves up against 134 basis points, where wave 3 is about a 2.618 times the length of wave 1. Further, wave 4 is a triangle which alternates with wave 2. Another supportive feature of this wave count, according to the alternation guidelines, if wave 2 is sharp and deep, a zigzag, as is the case here, wave 4 should be sideways, most often a triangle. And finally, wave 5 equals exactly 1.618 times the length of wave 1 at 206 basis points. This is another common wave relationship. Off the top, we favor a developing correction that should ultimately be followed by a rally well above 206 basis points heading into Q2. Corrections tend to terminate near the prior fourth wave low, which in this case was achieved, but the subsequent rally is only in 3 waves, a key characteristic of corrections, so the prospect for more downside activity near term remains intact. The next key level to watch for a low and a reversal to the upside is 161 basis points, where yields would retrace a Fibonacci 62% of the entire rally. Key resistance is 191 basis points. An impulsive break above there would be an initial sign that yields have bottomed. Okay, so now let's take a look at euro dollar. So the bottom line here is that we are looking for a low and a bullish reversal. First and foremost, the wave structure suggests that prices are completing a flat correction from the January peak in 2021, and we look for a bullish reversal in intermediate wave 3. Wave 5 of C equals wave 1 near 109 USD. A common relationship. We look for an impulsive break above the central line of the channel to provide initial evidence that wave 2 has bottomed. The next key objective is a break above the upper trend line of the channel. So closing action above this trend line supports the view that a trend change is underway. But let's add some context. A weaker dollar is viewed as inflationary, and this should favor higher prices in commodities, as we will see in a moment, and risk assets in general, like stocks and crypto. Okay, so now let's take a look at S&P futures. So not much has changed since our last week's video. So as we mentioned, we look for yields to begin another leg up. And this should be, of course, bullish for stocks. And in S&P futures specifically, we look for confirming price action that a double zigzag correction is complete off the top. So a key objective here for the bulls is overcoming channel resistance, which currently comes in at about 44.38. A forceful break above this trend line would basically confirm that stocks have bottomed. We look for any further weakness near term to be limited by 42.51, which is structural support. Ultimately, we look for prices to climb to new highs. We don't expect a bear market in 2022, that's for sure. Okay, so now next up actually is gold. The bottom line here is that we are bullish gold in wave 5. However, the open question near term is whether prices completed wave 2 of 5 or whether wave 2 will morph into a larger flat correction, because as we have wave 2 at this point, it looks too brief to be the whole wave 2, so we allow for further sideways to down activity to complete a larger flat. The 50% retracement of wave 1 near 1878 is a near-term support, but if wave 2 forms into a flat, we will look for stronger support to surface near the 62% retracement of wave 1 at 1854. Another key level to watch, this time to the upside, is 1989. So if prices break decisively above this level next week, we will assume that wave 3 is in play, and this would also rule out the probability of a larger flat correction in wave 2. A solid break above this level likely then targets the Fibonacci cluster into the 2192 to 2225 area, which includes the 1.618 multiple of wave 1. And of course, this is our target for Q2. Third waves tend to be aggressive in nature, so just keep that in mind. Also, another thing to note that the 1.618 multiple is currently projected from the recent low near 1877. Okay, so now let's take a look at the energy sector. We use the SPDR ETF as a proxy, the XLE. So since last week, prices saw a decent uptick, which is consistent with a developing rally in wave 3 of 3. Structural support is currently sandwiched between $71 and $66. Our target at $89/92 should be achieved in Q2. It represents a strong Fibonacci cluster comprising the 1.618 multiple of wave 1 and the 2.618 extension of intermediate wave 1. Once this zone is reached, we will begin to watch for a temporary high and a corrective pullback in wave 4 in red. Okay, so next on our list is our commodities. So I'll be using the Invesco Agricultural Fund as a proxy, or the food ETF as I like to call it. Since the global financial crisis of 2008, commodities have been in a downtrend until June 2020, a bit after the corona pandemic, shortly after which yields and interest rates reversed higher. The 12-year downward sloping trendline acted as support to the decline in intermediate wave 2. This is typical for breakouts where old resistance becomes support, and currently we are accelerating higher in wave 3. The 1.618 multiple of wave 1 is located near $31, thus a reasonable upside target for 2022. Keep in mind that this is a log scale. So basically this implies a 40% increase, which sounds concerning to say the least. Okay, and so finally, let's take a look at some crypto pairs. As always, first we will take a look at Bitcoin, which is, as we all know, the market leader. So the focus here remains lower in primary wave 4. The 62% retracement of wave A near 44,709 remains near-term resistance, so the prospect for one more decline towards the prior fourth wave low and the Fibonacci cluster between 28,445 to 25,443 remains intact. So this zone is our ideal bottoming zone from where we look for prices to reverse higher in primary wave 5. That should ultimately carry prices to new all-time highs, with the reverse 1.382 multiple of wave 4 an initial upside target. It comes in at 84,894. A solid break above this level likely then targets the next Fibonacci level. However, this will likely maybe, of course, a story for later this year. So this initial target, we look for it maybe to be achieved in the first half of 2022. Okay, so let's take a look at Ethereum. So the wave structure here is more or less the same, except that we view wave 4 as a flat, not a double zigzag like Bitcoin, but the implications are basically the same, where we look for one more decline towards the prior fourth wave low and the 62% retracement of wave 3 to finish off primary wave 4 and set the stage for a rally to new all-time highs in wave 5. Within this zone, we look for an initial 5-wave rally back towards the prior 4th wave high and then a corrective pullback to basically confirm a trend change. An initial target and probably a reasonable upside target for Q2 is 6100, which is the reverse 1.382 multiple of wave 4, of course projected from the prior 4th wave low. And now let's jump to XRP, which is one of my favorite crypto pairs. So we have a pretty straightforward wave structure in XRP, where we have traced out a sideways correction, probably a triangle, since the peak in 2018. And this triangle, it's interesting to note that found support near the prior fourth wave, near 13 cents. And now let's zoom in a bit and switch to the daily, and maybe even to the 4-hour chart would be better actually. So we can label a 5-wave structure of the low. Something to note actually is that wave E is an almost exact 62% of wave C, which is a common wave relationship in triangles. So the impulsive bounce from there is definitely suggesting that a tradable low could be in. However, we need to see some key levels broken to the upside to ensure that a bullish reversal is underway. Initially, we want to see this corrective channel formed by wave 2 to be broken, and the next key objective would then be overcoming the BD trend line, which currently comes in at about 95 cents. So breaking above these trend lines would help build the case that primary wave 5 on the weekly is underway. And now let's take a look at some targets. So $12 is a reasonable target for 2022. It's worth noting that thrusts from a triangle are often steep and aggressive, so this would be definitely a key pair to watch in 2022. Okay, so now let's take a look at some questions, and let's see. Okay, I see that Mohammed asks about some stocks. I think we'll see in a moment. So the first symbol is SKPC. Okay, so this is an Egyptian stock. So something that looks clear is that this recent decline looks impulsive. However, we don't have too much data to maybe form a compelling case. Okay, let's take it on a smaller scale and see whether we have a clear pattern. So this looks like a 7-wave rally, which is typically which is corrective. However, the subsequent decline looks also corrective. It's only in 3 waves, and if we draw a parallel channel, we can see that this corrective channel was broken to the top side. So very near term, we could be in for a at least another 7-wave rally. Let's see at some maybe resistance levels. And also maybe we can project equality for the next leg up. So if this proves to be a correction, we will at least have a key level to watch. Okay, so equality would come in at about $13. So the best guess at this point would be that maybe short term we could be in for another rally towards $13. But in order for me to become very bullish on this stock, I would need to see more than that. I would need to see maybe a break above the 62% retracement of this entire decline in a forceful manner to become bullish on this stock. So petrochemical. So okay, I guess this is a stock that relates to maybe oil, not sure. But as I said, in order for me to become bullish on this stock long term, I would need to see a break above $18, the 62% retracement of this entire decline. And the most likely scenario at near term is to see one more rally towards $13 to at least complete a corrective recovery of this 2020 March low. Okay, so now let's see what else. Okay, the next stock we are going to take a look at is AMOC, another Egyptian stock, Alexandria Mineral Oils Company. Okay, so another Egyptian stock. Let's see. Yeah, unfortunately, I can't say that I see something clear. I would prefer to have more historical data. Maybe this decline definitely looks impulsive in nature from the 2018 high, and this recovery from the low also looks choppy, overlapping, and it is still contained between two parallel trend lines. So this, which is a key characteristic of a corrective move. So yeah, unfortunately, I don't have a strong opinion about this stock. Here is the prior fourth wave high near $5. So in order for me to maybe consider a more bullish stance, to take a more bullish stance, I would need to see a forceful break above $5. But until then, for me personally, the risk here would remain to the downside. Okay, and now we have time for one more. Okay, the next symbol is ETEL, Telecom Egypt. Okay. Oh, it seems like I have been analyzing this stock, interestingly, so let's see how I did, actually. So, from the top in 2005, I'm labeling, which, let me just see if I switch to log scale, would this channel be better? Yeah, actually it is. So I'm labeling an ABC corrective decline of the top with a triangle in the B wave position. As we know, triangles typically precede the final move of a trend of one larger degree. So another interesting thing here to note is that this downward sloping corrective channel has been broken to the top side. So basically this hints that the trend has reversed higher, and specifically we could be accelerating higher in intermediate wave 3. Also, I have highlighted then the potential of a head and shoulders pattern with the neckline here, and yeah, as we can see, this has been broken, which is another supportive feature of this bullish wave count. So near term, I would expect prices to stall near the upper trend line of this base channel, which I draw by connecting the lows and drawing a parallel trend channel and projecting it from the top of wave 1. So this trend line will likely act as near-term resistance, but once overcome, prices in wave 3 should gain upside traction. And on the downside, I would expect the prior high near $15 to be support if tested. And if this is interesting also, yeah, intermediate wave 2 was an almost exact 78.6% retracement of wave 1. So okay, so now let's take a look at some targets. I have projected the reverse 1.32 multiple of this entire decline, and it comes in at about $57. So I would consider this level to be a reasonable upside target for intermediate wave 3. And also let's just project the 1.618 multiple of wave 1, yeah, which comes close to the reverse multiple. So yeah, this zone I would consider to be a reasonable upside target in maybe, let's say, in the next couple of years. Okay, so let me see what else. Okay, we have a question in YouTube from Bocata B. Could you see Solana? Okay, let's take a look at Solana. Okay, so let's switch to an arithmetic scale. Yeah, okay, so the first thing that looks clear to me is that we have completed probably an impulsive rally, and currently we are tracing out possibly a correction, because I don't think that cryptos are in a bear market whatsoever. This is just another correction. As we can see, the decline from the top is contained between parallel trend lines, which is a key characteristic of a corrective move. So I would expect this decline to be eventually fully retraced as Solana heads to new highs, maybe later this year, maybe in Q2, possibly, ideally. However, let's maybe examine a bit more the wave structure here. 6, 7. Okay, so can definitely count 7 waves. 1, 2, 3, 4, 5, 6, 7. And here we have I think a pretty clear triangle. So the way I would label this structure would be something like this. Where I view the latest decline as probably a fourth wave correction. So let me zoom in a bit. So okay, so I think it would be better if I put this, maybe this wave 3 label here, so we can get a flat correction. If this would require this decline to develop into an impulse. And let me see where the 38.2% retracement of wave 3 would come in. This would give us a level to watch for a probable low in a bullish reversal. Okay, so yeah, the 38.2% retracement is still very far, and the prior fourth wave low is also pretty far. So they come in at about $21. So let me see if I switch to an arithmetic scale. If we then project the other Fibonacci levels, yeah, it's almost near the limit of a fourth wave correction. So let me just try one more. If we project it from the top, yeah. So it's I don't say this is the clearest chart I have seen, but it's not clear as let's say XRP or Stellar Lumen, but the thing I'm most confident about is that this is a fourth wave correction. Whether this is let's say maybe a flat, which would require maybe a couple of maybe a fourth and fifth waves lower for completion, or whether this would maybe develop into a complex correction, maybe a WXY. It's tough to make a call here, but as I said, I don't believe that cryptos have topped or a bear market is underway. So ultimately, I would look for this fourth wave to be fully retraced in 2022. Okay, so I think this is it, and we are almost ready to wrap up. But before that, I want to remind everyone to subscribe to the channel, like our video. This helps the channel. This helps other viewers in YouTube to find these live streams easier. So as I said, like us and on Facebook, subscribe to the channel, and I will see you probably next week. So stay in touch. We will make again a announcement whether the next live stream would be next Sunday or after 2 weeks. So we'll just keep in touch. So thank you for watching, and also check us on Discord. We have a Discord group. We have also a website, TradeZine, so you can find more information there about future streams. We cover also a lot of different markets, so Like us, subscribe to the channel one more time, and I'll see you in the next one. Bye for now.